Good morning, everybody, and welcome to today's morning market. So today I'm going to focus in on US equity market strength, the recent US earnings season, and also what we saw yesterday from Morgan Stanley. Some of you may have heard the words earnings season, but you might actually not be sure what that means. So US companies report on a quarterly basis. And within that, they're looking backwards. So they're reporting on things such as sales, earnings, and investors look at how those figures have performed versus expectations. But they're also giving you guidance as well. So looking forwards around the performance of the company itself. Now, what have we seen so far from the earnings season in the US? Well, actually, in a word, positive. So you've seen 50 companies report so far. And within that, 80% of those 50 companies have reported above expectations. If we look at what's actually been happening within US equities, so yesterday was a good day for US equities. They finished up around about 0.5% for the main index. For the more technology-focused index, that finished up around about 0.3%. But I think what the really interesting number is actually, if we look over 1 month, US equities are up around about 4% over the month. So it's been a strong period for what is the world's largest stock market. But let's just dive into yesterday's key earnings report, and that came from Morgan Stanley. So as you know, Morgan Stanley is one of the world's largest investment banks, and yesterday's report was positive. So just looking at some of the figures, so profit was up 32% from a year ago. And then the investment banking business there was the main source of growth overall. So the stock itself, that was up 6.5% in after hours trading. And one thing that we've been looking at as a team is what we've been calling like a broadening out of equity market performance. So what do I mean by that? What we've seen previously is equity markets being very narrowly led by those big tech names, but actually you're starting to see a broadening out of performance. So probably the best example of that is the banks. And what you've seen over the last 5 days is the main banking sectors in the US up around about 6.5% over that period. And that's above the S&P 500. So illustrates what's happening with that broadening out theme. But when we think around yesterday, how did asset markets move? And it was actually a positive day in general for equity markets. I've talked a little bit about the US, but maybe moving across to where we are right now in the UK. The UK index was up nearly 1% on the day. And that was really after the sharp fall that we saw inflation that Seb covered yesterday within morning markets. In Europe, maybe a little bit more challenging. You've seen a slightly more marginally negative performance come through. And that's really driven by the luxury goods stocks, so particularly LVMH, which saw a small drop in sales come through. Okay, so what do we have later today? And we actually have what is the key event for the week, which is the European Central Bank, so the ECB. It's their interest rate decision day. Now, what's expected? What's expected is a 0.25% reduction in interest rates. If that happens, that will be the third cut in interest rates in Europe that we've seen so far this year. As always, we'll keep you informed. George Bell and myself will be on the week in markets and we'll give you all that we've heard from the interest rate decision meeting. That's everything from me. I hope you enjoyed today's video. I look forward to speaking to you soon. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.